Welcome to everyone. In this week's video, we will deal into the gold bullion market for the week of July 14, 2025. Before we start, make sure you read the disclaimer carefully. Since reaching an all-time high of 3,509.90 on April 22, the market has been moving sideways. Currently, on the short-term time frame, the gold bullion market appears to be forming a triangle pattern. Let's explore what we can anticipate for the upcoming months. First, let's examine the 18-month cycle. From a long-term perspective, as long as the gold market does not dip below this cycle line, the bullish sentiment remains intact. We expect this 18-month cycle to hit its low point in September. Next, we will analyze the 40-week cycle. As I mentioned in last month's update, the previous 40-week cycle formed in November 2024, with the next one projected for September. The blue vertical dashed line indicates the time frame for this cycle's low formation. Technically, at this time, the market is supposed to dip below its cycle line, but it remains bullish for now. We can expect the gold bullion to continue moving sideways until it forms its next 40-week cycle low. If this is correct, a significant rally could follow once the 40-week cycle low is established. Should the gold market cross below its cycle line, it will indicate potential downside targets. We also need to monitor the blue cycle trend line, known as VTL. According to Hearst, a crossing below this line, confirmed within the next 2 weeks, would validate that the previous peak before this crossing marks at least a 54-month cycle peak of 4.5 years. The 40-week peak aligns with the cycle peak, signaling neutrality. Now, let's look at the 20-week cycle. Last week, the gold market dipped slightly below its cycle line, which is currently at 3,290.80. This crossing occurred with a green candle, however the midpoint remains at the cycle line. For a valid signal, the weekly midpoint serves as a reference for confirming the crossing. When the crossing is unclear, like last week, we require confirmation from the next trending candle. This week, the gold bullion must produce a bearish candle well below its cycle line, to confirm that it has indeed crossed below it. If confirmation occurs, the potential downside target will be 3,070.70. The last 20-week cycle low was established in April 2025, with the next one scheduled for the end of August. Indicated by the green vertical dashed line, the green trend line represents the 20-week cycle trend line, or the 20-week VTL. If the gold bullion market crosses this line, it will confirm that the 3,509.90 all-time high is at least a 40-week cycle peak. And it will also validate the crossing of the cycle line. Even if the gold market dips below its cycle line in the VTL, it remains in a bullish state until the monthly time frame crosses below its cycle line. Regarding the 80-day cycle, the triangle formation is clearer on the daily chart. Trading opportunities within a triangle can be tricky, but through cycle analysis, we can pinpoint successful trading opportunities on very short-term time frames, like the 40 days and lower. However, let's focus on the 80-day cycle for now. In the last update, I anticipated the 80-day cycle to hit a low on June 16. But it appears to have extended longer than expected. The last low is now placed on June 30, making this 80-day cycle 13 days longer than Hearst's nominal model, which averages 68 days long. An 81-day cycle is slightly extended but impossible, especially within a triangle formation. When the market forms a triangle, it indicates that traders and investors are waiting for news. The next 80-day cycle low is expected to occur in the first week of September, marked by the purple vertical dashed line. Due to the rule of synchronicity, the gold bullion will also form the 20-week, 40-week, and 18-month cycles simultaneously, making the September low particularly significant. So far, the market has remained bullish, with only one trading signal triggered since the start of the year. This positive signal has a success rate of 100%, is rare for an 80-day cycle to yield only one trading signal over more than 6 months. During the next 80-day low, the gold bullion is expected to cross below its cycle line, indicating a downside target. However, the prevailing bullish sentiment in the gold market suggests a possibility for the market to reach a new high before the next low in September. Lastly, let's discuss the 40-day cycle. The previous 40-day cycle low occurred on June 30, coinciding with the last 80-day cycle. This cycle was also longer than the nominal average of 34 days, which may explain the stretching of the longer cycles. The next cycle is anticipated to form on August 11th. Reviewing what has happened since my last update. I had expected a bullish candle to cross above the cycle line on the Monday. On that day, the gold bullion confirmed the bullish crossing and validating the target of 3,507. On June 16th, with a peak at 3,476.80, the gold bullion fell short of the target by just $30, or 0.87%. Since the high was within a 1% margin of error, the target is considered met. With one positive trading signal out of two, the 40-day cycle has a 50% success rate. After reaching its peak on June 16, the gold bullion crossed back below its cycle line at 3,314 on June 30, providing a downside target of 3,152. This target remains valid until the gold bullion crosses back above with a very bullish candle. In conclusion, the gold bullion is currently in a trading range within a triangle pattern. We anticipate a significant low in September. Before this major low forms, there is a chance for the gold bullion to reach a brief new all-time high. Regardless of how the gold bullion exits the triangle, the ensuing movement is likely to be sharp. For more short-term analyses, or to consult the success rate table and gain a deeper understanding of how the cycles work, I recommend visiting my website, Tradingmarketcycles.com. If you enjoyed the video, please give it a thumbs up to support my channel, share it with others, and subscribe to stay updated. This wraps up this week's video. Thank you for watching, and I'll see you next week with another exciting installment.